Good afternoon, Winnie. Well, this news around Adani Group has again led to some worries around the exposure of Indian banks and financial institutions. So we decided to take a look at just how large the debt is and how exposed Indian entities are. So as of FY24, which is the last disclosed numbers, the group's total debt stood at 2,41,000 crore rupees, which includes about 2.21 lakh crores in long-term debt. That makes up about 92% of the total, and 19,819 crores in working capital, which accounts for the remaining 8%. But the group continues to hold significant liquidity buffer with a cash balance of 59,791 crores, and that accounts for nearly 25% of the total debt. Now, let's look at where this debt is coming from. Indian or domestic Indian banks and financial institutions contribute the most. They make up 36% of the group's total borrowing, and that includes about 75,800 odd crores in long-term loans and 12,200 odd crores in working capital loans. Global capital markets come next with 29% share, followed by global banks at 26%. The rest of it comes from domestic capital markets and other sources. Now, if you break it down further for Indian banks, public sector banks have collectively lent about 36,447 crores to the group, across long-term working capital as well as long-term debt, while private banks account for about 8,568 crores. Now, other domestic financial institutions like your LIC, which is the largest holder, and NBFCs together account for 43,086 crores. But when it comes to individual lenders, LIC, of course, tops the list. SBI, we understand from sources, continues to have an exposure of about 27,000 crores, which was the last disclosed figure. And Axis Bank's exposure has come down to less than 9,000 crores. The other major lenders include Punjab National Bank, REC, Bank of Baroda, and IndusInd Bank. But if you look at Adani Enterprises, which is the flagship company, their annual report, they've listed ICICI Bank, IDFC Bank, Yes Bank, and other lenders that they've borrowed from as well.